Good morning and welcome to another edition of our Journey to Debt Freedom. I am Sheila Wilkinson-Sanders, and I want to first of all apologize that I haven't spoken to you in the last few weeks because it was tax season, and for those of you that know me, it was also 30 Shades of Shay season, and so I was just a little bit busy, but I'm back. I'm back. Right now, it is Financial Literacy Month. And so I want to talk to you about some topics that will certainly impact you short term and long term in becoming debt free. And I want to talk to you about one of my most passionate subjects, and that is credit, about getting your credit in order. If you want to be debt free, if you want to have that financial freedom, you need to be what they call a less risky person. Remember, we talked about leveraging off of other people's resources. And so you need to be able to show that you are a good risk in order for people to want to loan you money at a lower interest rate, for you to be able to get money with no interest being charged. And so that credit is really, really important. It helps you to get lower interest rates. I know we were talking very early on about negotiating terms with banks. And some of you called me and contacted me and said, Sheila, I called the bank and they wouldn't lower my interest rate. Well, when we investigated a little bit further, we found out it was because your credit score was so bad that the bank felt that you were not a good risk to negotiate with you. And so we had to come up with some other suggestions, some other options for negotiating terms. But in the meantime, you need to start working on getting your credit in order and getting your credit score higher, because that gives you leverage, that gives you negotiating power, right? So credit score, what is your credit score? Credit scores are anywhere between 300, God forbid, and close to 900 by Fair Isaac, which is the company that most lenders use. And so what is a good credit score? A good credit score is basically anything above a 720. So you'll see here, basically, if you're in a 620 to the 659, you're in that uncertain stage. The lender is not quite sure about you, if they should be lending to you. But if you're in that 750 and above stage, which, yay, that's where I am. I'm really close to that 800, not quite there yet. Then you are what they consider to be an excellent credit. And it allows you to negotiate and to do things and to be, at that state of financial freedom where you don't have that burden of worrying about, getting credit. All right, so, I always recommend to people that you should review your credit on a regular basis. You should know where you are right now with your credit. You should know what your credit score is. You should know what you have outstanding. You should know what's on your credit report. So a lot of people, when they look at their credit, the first thing they want to do is look at their credit score. You need to start with what's on your credit report, because then you understand your score very easily. So I always recommend that you order your credit report at least quarterly. By law, the three credit bureaus, TransUnion, Equifax, and Experian, are required by law to give you at least one free credit report per year. Not your credit score. They're not required to give you your credit score for free, but they are required to give you your credit report for free at least once per year. So I usually, for those of you that are in the Midwest like me, I usually recommend that you start with TransUnion, because they are located in the Midwest. And most of your creditors that you do business with are going to report to TransUnion in the Midwest. So you can go on to annualcreditreport.com. That's annualcreditreport.com, and order one free credit report from just one bureau, And you're going to look at that information. If there's anything that needs to be corrected, you can correct it. And then the next quarter, order it from a different bureau. So if you do TransUnion this quarter, then in June or July, you can do Experian. And then in September, October, you can do Equifax. So that each quarter you're getting a free credit report. Now, another service that I recommend is not as detailed as annualcreditreport.com, but will help you with your credit score for free, is creditkarma.com. That's credit with a C, karma with a K. With them, you can get your credit score on a regular basis. It's not going to give you as anywhere near the detail you'll get on annualcreditreport.com, but if you want to start keep track of your credit score, and the credit score is not as accurate as it is on annual credit report or from each of the individual bureaus, which are going to use the algorithm that Fair Isaac uses, but at least it gives you a general idea of your credit score. All right, so annualcreditreport.com. What are you going to look for? You're first going to look at your basic information. Is it really you? Is it your name spelled right, or is it someone else's name? You know, because basically the credit card company should have your name spelled right. So if it's not, that's a red flag if your name isn't spelled right, or if there's a different version of your name. So I have a hyphenated name, so I'm always looking for, you know, Sheila Wilkinson, Sheila Sanders, Sheila Wilkinson-Sanders. Over time, credit card companies have used all three. But if I see Sheila Dark, then it's like, I'm not Sheila Dark. So that's a red flag. So you want to look at that basic information. You want to look at, make sure that the addresses on there are all your addresses. If you've never lived in Arizona and you see an address for yourself in Arizona, that's a red flag and something that you want to investigate and get corrected. You want to look at the employment information. If there's an employer on there that you weren't employed with, again, a red flag. Or if your employer or a past employer is not on there, that you were employed by, that's something that you want to look into also, because what makes you more credit worthy is having longevity of history of information. And so you want to have as much good information on your credit report as possible. Once you look at all that basic information, you know, making sure that you're the right age, you know, the right birth date, all of the right basic information, then you want to start to look at the various creditors on there and see if the history information on there is accurate. You're going to look and make sure you want to have all checks under history for each month. You never want to see 30, 60, 90, 120. That means those are the number of days late that you were on a payment. So, and you'll see that those numbers change in color from like yellows to greens to blues to reds to purples, so on and so forth. So, you know, when it gets closer to that red and you see red numbers, you know, that's really bad. But anything over checks is not a good thing. You want to have all checks. If you have things where you have 30, 60, 90, 120, 180, and so on and so forth, then that means that's a long time that you didn't pay that debt. And so you want to get those taken care of. You want to contact those companies, see what arrangements you can make to get those off of your credit report, to get back to the point that you have check, 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 check. Collections. You never, ever, ever want to have collections on there. Those will significantly impact your credit score and bring your credit score down in a very quick manner. Anything that has to do with a government, with the federal government or with the local government that's on there, those things make you a more risky individual, and things that you want to try to correct as soon as possible. So, you know, we talk about credit history. Let me tell you a really quick story. One of the embarrassing moments in my life. In 2007, 2008, right when we were having the foreclosure bubble, the real estate bubble, I bought a piece of property, bought it with and financed it with a very reputable lender, who quickly sold it to a non-reputable lender. And about 4 or 5 years ago, I was attempting to refinance that piece of property. I couldn't sell it because that's when the market fell out. So I've been renting the property out, and my interest rate was a little high, and I wanted to lower the interest rate. And the lender was giving me a really, really hard time about refinancing the property because it was underwater. So I had been negotiating with them for almost a year trying to get this thing refinanced. And I had one of those days where I was just angry. And so I just said, you know what? I'm just not going to pay this mortgage anymore. And so for about 4 months, I didn't pay the mortgage. Danger, danger. Never, ever do that. Learn from my experience. And I knew better. but I was just angry at the moment. Long story short, I did get it refinanced. I got the interest rate down, but in the process, my credit score in those 4 months went down almost 140 points. For the first time in my life, I had a credit score in the 600s. I was absolutely positively devastated. And it took me almost 4 years to get my credit score back up into the high 700s, and I'm close to back into the 800s now. I'm not quite there, but that's my goal for 2015. 4 months, 140 points, 4 years to get those 140 points back. 4 years. When I look at my credit report now, I have 100% as far as, paying on time, as far as length of service, all that history stuff. And when you look at paying on time, it says 99.6. 99.6. Because of that error I made 4 years ago. It's still showing up, and it'll show up for 7 years. So I still have another 3 years before that falls off. But, I'm doing other things to make sure that I get my score back up to that 800. But I say all that to you to say that one little mistake, one little 30-day late, 60-day late, 90-day late, 120-day late can impact you significantly, very quickly. But it takes a really long time and a lot of work to get it back up to that high point. So you want to pay on time. You want to pay on time. You want to pay on time. Can't say that enough. The other thing is, and I think I talked about this early on, is you want to make sure that your balances compared to your limit are very low. So if you have a total limit of $10,000, you want your balance to stay below $3,000, which is 30%. Because when you get above 50%, then you're considered to be a higher risk because you don't have as much limit available to spend. So you want to keep your balances overall along all of your credit below 30%, and you want to keep it below 30% for each card. You want to make sure that you have long-term unemployment. You want to make sure that you're stable. And so to be able to show stability is having longevity in your credit and longevity in your work history. So here's the breakdown of what your credit score is made up of. We talked about paying on time. That's that payment history. Outstanding debt. We talked about that. Keeping it below 30%. Length of credit history. So, having more credit over a longer period of time. So, someone who has only had credit established for 3 months is more risky than someone that has credit established for 20 years. So you're able to pay on time for 3 years, that's okay. But if you've been able to pay on time for 20 years, then that makes you a more less risky person. Inquiries. So let me talk a little bit about inquiries. They're what they call hard inquiries and what they call soft inquiries. So soft inquiries are inquiries on your credit report from current creditors. Creditors have a right to periodically look at your credit to make sure that you are still credit worthy, not only with them, but with other creditors. So they'll do soft inquiries to see if you're paying on time, to see if you've established new credit, to see what's going on with you in your life, and determine if you're still a risk for them. Those soft inquiries do not impact your credit score at all. However, hard inquiries do. And hard inquiries is when you apply for credit. So when you're looking at your credit report, it's very important that you look at that inquiry section, at those hard inquiries, and make sure that you actually did apply for credit with those companies. Which brings me to a very important point, and that's about car companies. When you go in to buy a car, they always ask to get a copy of do you want to drive the car? Give me a copy of your driver's license. And I know in January I bought my daughter a car, and the guy was like, well, do you want to drive the car? And I said, absolutely not. And he said, well, don't you want to see how the car drives? I said, no, I know how the car drives. It drives like a car. I don't need to drive the car. Well, he wanted my driver's license. And think about it. Why do they want to make a copy of your driver's license for you to drive around the parking lot and they're in the car? Really? They're making that copy of your driver's license because they're checking your credit. And so the car dealer was very frustrated with me because I said, if you want to drive the car, you can, but we ain't driving the car. It's because he couldn't check to see what my credit was because I wasn't sure if I was going to buy that car or not. And so if you go to 5 or 6 different car dealerships, that's 5 or 6 different hits on your credit. And then when it's time for you to apply, you're devastated because your credit score has gone down because all these car dealerships have run your credit. So be very, very careful when you're applying for credit, when you're doing things where you give folks your driver's license or your social security number. Okay. And then there's a small amount that deals with the types of credit. So secured credit versus unsecured credit has different impacts. All right. So how do you improve your credit score? Pay on time. Pay on time. Pay on time. We talked about limiting your balances to 30%. Avoid those high unnecessary charges to your credit card. Use your credit wisely. Do not apply for credit that you don't need. So you want to have that longevity, but you want to do it strategically over time. Don't apply for 3 or 4 credit cards at the same time, because what that then gives the message is that you're desperate for credit. So, do it like if you want to just start to build it over time, over the year, maybe every once a quarter, but not 2 or 3 cards at the same time, because that makes you a riskier person. Payoff. We talked about this recently about paying off those high balance cards. Renegotiating those interest rates. We talked about that before. If you're going to apply for credit, do it with the ones with the low interest rate credit cards. Okay? Use credit with 0 interest rates. Do not apply for credit cards that you don't need. And never, ever, ever, ever cancel a credit card. We talked about that before, because that lowers your limit. It reduces your history over time. All those things we talked about that impact your credit will negatively impact it by canceling your credit card. So tear it up and put it in the drawer, but never ever cancel that credit card. Never ever cancel that credit card. Never ever cancel that credit card. I hope that this has helped you. I hope that you all go out now and check your credit and try to improve your credit score. And we're going to talk about other things to make you financially stable so that you can become debt-free. I'm Sheila Wilkinson-Sanders, and I hope you have a wonderfully supreme day. Remember to stay faithful, focused, and committed.